There's a basket of indicators that I'm going to use for this timing that'll tell me what asset class is the most, whether it's high dividend yield stocks or cash flow real estate. The high dividend yield stocks don't offer the tax advantages that real estate offers. So what I want is the cash flow real estate. It's probably less than 3 to 5 years. I'm just measuring all these different ratios. I have a team of people at Wealth Cycles, and it's their job to monitor these things, track these things. We publish stuff every single day. And then, like I said, there's this private newsletter that'll tell you where we are and why. It'll show what these indicators are telling us, how close we are. You know, when you come off a bubble like we've just had in real estate, and you see these charts that have these patterns, what's really interesting is that something always happens to fulfill the destiny that these charts and this bubble popping. I believe that you're going to see in the next 2 years or so, 3 years, something will happen where it's going to be even harder than it is now to get a loan on real estate. You're going to have to come up with a 50% down payment. It's just going to be about impossible, and that's what's going to cause the mortgage rent ratio to overshoot the mean, and it needs to go. When we had a bubble and it went up to where it cost $1.25 for every dollar's worth of rent that you were going to get back in 1989, when that bubble popped, it overshot the mean of right around $1, and it went down to about 90 cents. So that means on the national average from 92 to about 96, real estate cash flowed by 10%. But yet nobody was going out and buying it. Why? Because the banks weren't lending. It was bad economy. It was hard to, and so people weren't swapping houses. And this time we're coming off the biggest bubble in history, where people were paying $1.95 for every dollar's worth of rent that they were getting, which is absolute insanity. And that was the national average. And so that bubble popped, and it's reverting. But today, we're still above the bubble of 1989. So when this thing finally plays out over the next few years, I think you're going to see, on a national average, real estate, if you can buy it, if you qualify to buy it, and most people won't, you're going to see it cash flow on the order of 15%, 20%, I don't know, but it's going to be big, because whenever there's something that's way out of whack to one side before reverting back to the mean, it usually overshoots and then stabilizes. And that's just something that happens in physics. I used to be an electronics engineer. It happens in electronics. It's part of nature, and it's part of human action. And people don't realize the economy is entirely psychological. It's all just what we believe at the moment, and it's subject to the whims of how the country is feeling. And so